Let's get started, guys. So we're going to be talking today about an intraday strategy on trading index futures. Okay, how many of you guys and gals trade futures or have traded futures? So we have some, we have I do, hand raised, yes, 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 never, none. I'll be honest with you, those that have never traded futures are usually without any bad habits. So this should be very, very interesting to you, and hopefully it appeals to you. ES lost. Yeah, the ES, which is the E-mini, right? We're going to be talking about the E-mini products, and the ES is the E-mini product for the S&P. Tonight we're going to be talking about NASDAQ futures, and that is the NQ. So let's get started. Obviously, I got to talk some risk disclosure before we get into this. We are not financial advisors at TheoTrade. No one here, none of our officers, employees, representatives. We are not licensed financial advisors, registered investment advisors. We're not a broker-dealer. The securities used as an example are used for illustrative purposes, educational purposes. We are not recommending that you buy or sell this security. And past performance shown in examples obviously is not indicative of future performance. Investing in futures involves risk, guys. So make sure that you you understand the risk before you dive in head first. All rights are reserved on this material. If you wish to reproduce it or use it in some capacity, you must contact us. Here's our contact information. Support at TheoTrade.com is a perfect place to get a hold of me. So about TheoTrade, some of you obviously are saying, hey, Tony, so you're familiar with TheoTrade. We are a trading education firm. We're based out of Scottsdale, Arizona, and we specialize in education for options, futures, and stocks. TheoTrade was started by veteran professional traders who are first and foremost experienced trading educators. We have a very good crew of educators at Theo. And although we provide the best education in the business, your results are ultimately the responsibility of yourself. Individual trading results will vary. Again, trading has risks. It involves real money, but we are here to help you mitigate those risks and those pitfalls while learning a skill that can last you a lifetime. My name is Tony Rago. I provide all of the NASDAQ instruction here at TheoTrade. I've been in the capital markets for over 20 years. My specialization is the NASDAQ E-mini. I'm very, very active in the Theo chat room. I provide actionable ideas, meaning I provide trade ideas throughout the day. I am in the chat room probably too much, to be honest with you, but I'm in the chat room. We make a plan pre-market, and then we are going through and I'm providing real-time feedback on the practical application of the strategy that we're going to go over here in the next several minutes, I should say. So the learning objectives for today are why you should trade intraday setups and index futures, what the capital requirements are, what the risk reward of trading futures is, and how to utilize my proprietary levels for entries and clearly defined risk. More importantly, it's how you can use the rules of this strategy to mitigate big losses while learning, as well as utilize this to generate income on a daily basis. Now, I mentioned earlier that some of you that have never traded futures, this may appeal to you, and you may be very successful out of the gate because you have not created any bad habits, which a lot of us, when we jump into futures, we kind of do it without, any kind of compass whatsoever, any kind of education. And I'm sure some of you that have traded futures have experienced those losses. So I'm going to teach you, and I can teach you, how to identify the setups and take action. So why the NQ? You know, the ES we talked about, which is the S&P E-mini product, is by far the most popular product. It's highly liquid. The NASDAQ, and the main appeal for me on trading any index future for that matter, is to generate income during a cash session or the regular trading hours without having that overnight exposure, right? I mean, how many times have we had stock positions and we wake up and we see, you know, maybe the futures are down 50 or maybe the futures are up and maybe we have short positions on. But that indication pre-open kind of lends itself to what the day is going to be for us, right? If we are stuck in stocks. So the appeal for me is there's enough volatility, there are enough setups throughout the day to be able to do what we need to do and get into a cash position going into the overnight. Now, that being said, all index futures do trade in a Globex session, which is the overnight session. I tend to like to trade the NQ in the cash session, which again is the regular trading hours. So normal market hours, 9:30 a.m. to 4 p.m. Eastern. The index futures, NQ specifically, again, have great volatility. Someone's got a microphone on. Sorry about that, guys. Now, again, I like the NQ over the other E-mini products because it has expanded range. Okay, it's not uncommon, and especially over the last week. The last week had just extraordinary range on a daily basis. We had, you know, 300 handles, 300 points, if you will. We'll get into what a handle is here in a second. The bottom line is it has a massive range as compared to the NQ. Now, that's a function of the NQ not being very widely traded. However, that in itself is a positive for us because it is very mechanical in nature. So by utilizing price action with the key levels that I'm going to show you guys, we're able to identify risk no matter where the market is trading. That is the only thing that gives us an edge as intraday traders in this market or in any market. So before we get started, here's just a testimony I wanted to share with you guys. I'm a newbie to TheoTrade. I feel extremely fortunate that I stumbled upon you guys. Like most traders, I dabbled here and there, had a few wins, had many more losses than I can remember. Feeling defeated, I would quit for a while, then I would come back, quit again, and then come back. And that was the road this person traveled for many years. Just started listening to your segment over the last few days, and I just wanted to thank you for teaching what you're providing to us. Every one of you guys at Theo are fantastic professionals. Some of the notes I get from each one of you guys in your teaching styles are notes of caution, notes of strategy, planning, and most importantly, we all feel the devotion you guys have in truly caring about us. Caring about us Theo traders in your own individual ways, reaching out to help each and every one of us. And that's exactly what we do. You know, we understand that there's a learning curve and some of these products and some of these strategies are a little difficult. So we really take pride in our education and we want to make sure that you guys get it right out of the gate. So are we ready to learn how to trade the NASDAQ E-mini? We're going to talk about a strategy that I've developed that has clearly defined entries and clearly defined risk parameters. Remember, we always want to identify risk before reward, no matter what. If we can't identify risk in any given trade, we have no edge. We are just blindly trading in the market. There are many opportunities for both long and short trades throughout any given day. And again, I am in the chat room to help you with the practical application of this strategy that I'm about to walk you guys through. I walk you right through the setups. I talk about how to execute the order, as well as how to handle risk when a trade goes against you. So before we get too knee deep in it, I know that there's some of you that have never traded futures, so I think it's important that we go through a glossary and some terminology that I'm going to use continuously throughout this presentation. So number one, again, we're talking about intraday trading. That means we're trading during the cash session, regular trading hours, and we are taking short-term setups. They will be both long and short throughout the day. We utilize price action, right? And the way that I talk about price action is the analysis of candles on our chart as price develops. The reason that I stress that price action is key is because it is the only thing in the market, in this game, that is not subjective. You guys have all heard the adage that price never lies. That's what I mean by it. It is not subjective. There is nothing subjective about price. So my strategy is rooted in price action. Entries. When we talk about an entry, that is executing the trade or getting involved. You heard me mention the term handle. That is trader speak, if you will, for futures. And a handle is 1 point or 4 ticks. The NASDAQ E-mini as well as the ES trades in 4 ticks per handle. So a handle is going to be from 56 to 57. That equals 1 handle. Okay, and it's important that we grasp that term right there because I'm going to lean on that throughout this presentation a lot. Okay, each handle on the NASDAQ E-mini, the NQ, I'm just going to call it NQ from now on, is worth $20 per contract. Okay, so one handle is $20 per contract. That's $5 a tick, 4 ticks in a handle. Okay, spots. You're going to hear me talk about spots. These are levels on the chart that we use for entries. They are fixed levels for entries. Okay, all of the levels that we're going to talk about on my chart, all of the levels that we're going to talk about on my chart represent the entire handle. So back to the bullet previous, 56 spot, sorry, encompasses the 56 quarter, the 56 half, the 56 3/4. So it encompasses the entire handle. That's important to understand. Risk markers. These are levels on the chart that we use to lean against or watch price related to that level to figure out where the market is headed. It is also an indicator that allows us to identify risk and understand when a trade might be busted. Okay? Risk out. I'm going to talk about getting risk out of a trade. And what that means is we're going to take a portion of profit on the position and we are going to then leave a portion of that position at an even stop. So that is the definition of risk out. Once we have all but a runner, and I'm going to get into what a runner is, on, that means we can no longer lose money in that trade. We are net positive on the trade, and we are now protecting that last balance of the position to let it run, right? How many of us have let losers run and have taken winners off way, way too soon, right? Everybody has done it. Everybody continues to do it. I'm going to teach you guys how to utilize these levels to stay in trades, to let runners run. Okay? A stop at even is just basically placing a hard stop on your runner once risk is out. Now, I coin a term called day done. So what I try to teach everyone that wants to trade the NQ is we have a trading plan, right? Our trading plan is, number one, it's a feasible goal that we look to attain on a daily basis. It's feasible in that it can be done on a consistent basis. Now, this goal is very commensurate with your level of experience, your tolerance for risk, your size of your account, right? Because it's not feasible to say, hey, I want to go make 50 handles a day, right? and I've got a $5,000 account. That's just not feasible. So we're going to talk in terms of creating a trading plan that's feasible to help you grow that account. Number one, you want to set yourself up for success, but we want to talk about what being day done is, and that is meeting your daily goal according to your trading plan. Okay, and once your day done, believe me, I tell these folks in the room, you're done, be done, because it's very, very easy to capture these handles or these points throughout the day and then just give them back because we're over trading. So what does the chart look like? What does all of this stuff that I'm talking about look like? This is the chart that we trade right here, okay? Each one of these yellow lines represents what I call spots, and the dashed blue lines are risk markers, okay? So you can see how the spot, the yellow line, is the entry, and then we're utilizing the dashed blue lines above and below the spot to tell us where price wants to go. Now all I've done, guys, is I've taken the 100 handle block. I've taken the 100 handle block and I've identified these levels throughout the 100 handle block. And guess what? They repeat themselves every 100 handles. If you notice over here to your right, the dashed blue lines, the 32, the 22, the 12, the 02, they're all on the 2 handle because I've analyzed price long enough to understand what happens when we get to the 2 handle throughout the entire 100 handle block. So there's continuity throughout the chart. And again, you can see, guys, how this sets up. If we're looking at this as just a support and resistance table, and meaning that when we test levels from above, they are long setups. When we test them from below, we anticipate that being resistance, so they're short setups. In any case, I maintain that we can always identify risk in any trade, no matter where we are, okay? So this gives you kind of an idea of how this works. If we're using the yellow lines as entries, you can see how the market reacts from the yellow lines, okay? And then without doing too much of a deep dive on the risk markers, because that's what you're going to find in the class, I go very, very in depth on this stuff. You can see how price reacts around those as well, okay? All right, spots and risk. Spots and risk markers act as support and resistance levels. Remember, the 100 handle block, and we've got levels established throughout the entire block, the 100 handle block, okay? We watch price action around these levels, meaning we're looking for higher highs or higher lows. Bottom line is we're able to see how price reacts on those levels, and that is where we get involved, okay? So when we identify risk before putting the trade on, we might find that a spot is open, and I've got my air quotes up, open for a test. And what I mean by that is I'll say in the room, for instance, hey, the 66 spot is open, okay? So as we come into the 56 spot from above, we're going to buy that 56 with a logical target 10 points above or 10 handles above, right? And in the class, I show you guys how to maximize profit from that entry, getting risk out of the trade, leaving a runner, getting to that logical target of the open spot for the 10 handles, okay? It's very simple, guys. All we're doing is waiting for price to come to a spot. If we sit there and let price come to us, and we have the mantra of trading spots only, it keeps us out of trouble. It keeps us from over trading, and it lets us see the tape much, much clearly. And when I'm saying tape, I'm talking about price as it's developing throughout the day, okay? So we like to buy spots when they're tested from above, i.e. they should be support, and then we like to sell spots when they're tested from below, i.e. they should be resistance, right? We're looking for a reaction on the spot. That's why we use them for entries. Now, if price continues through a spot, we are then leaning against the markers that are above or below the spot. So for instance, without getting too in depth, if we're buying a spot on a test from above, the marker that's below the spot is utilized for support, right? So as long as that remains good, meaning it's not broken, then we can stay in the trade. So risk markers, let's talk about risk markers. And I think it's important to tell you guys, that I do not deploy a hard stop at entry. Okay, so I know that some of you guys may, have learned how to trade futures from other folks, and they tell you, hey, you got to have a stop. You can't just, go driving around, without a windshield. You got to have a stop, right? I don't do that, and it sounds a little unorthodox, and it is. Okay, we do have something that I call a disaster stop, because we don't want to just completely be at the mercy of price action, especially in this super volatile environment that we've had lately. But in a normal environment, we can do this without having a hard stop. As a matter of fact, my experience with hard stops has been that they work extremely well. They stop you out, right? So I'm going to show you on this chart in the class how we can stay in these trades. And just by utilizing price action, we can avoid taking these -5s and taking these -6s, okay? So we do that by watching risk markers as price interacts with them. They are areas defined on the chart. Remember, they're on every 2 handle throughout the 100 handle block. Very simple. They provide guidance and clues to the overall price action of the market, or it tells us where the tape is going. And they too also represent the entire handle. So a risk marker on a 2 handle, so let's just call it the 12. Remember, I said I was going to use the term handle a lot. Okay, so the 12 handle is represented by 12, 12 quarter, 12 half, and 12 3/4. Okay, so it's very important that you understand that, even as a precursor to the class that you guys are going to watch over the weekend. Bottom line is we utilize the risk markers to identify risk from an entry on a spot. That being said, if our spots are fixed throughout the 100 handle block and our risk markers are fixed throughout the 100 handle block, then you can always identify risk in any trade utilizing these levels. Okay, so we lean against the marker, meaning it's not a hard stop, respective to our entry. Once a 2-minute bar closes above or below the spot you are coming from, it opens the corresponding spot. So when we talked about having that runner previously, this is how we stay in trades. So as price continues to develop in our favor and it breaks markers, let's say we're long and it starts breaking a marker above the spot, we know the next spot is open. So now we've got a logical target of 10 handles above, and then in the chat room, I can help you and I walk people through how to stay in trades to not only get that 10 handles, but guys, we've been getting 20 and 30 and 40. There have been members that have booked 50 handle runners here last week, right? And that is uncommon, but we're able to do that. And it's all by getting risk out of the trade and just leaving the runner. I try to tell everyone that follows me to not care about the runner. Once we really just completely don't care about the runner, like if it comes back to stop us out, then so what? We can always get back in. We're still net positive on the trade, right? We've already got the bulk of the balance of the trade done. So if we don't care about it and we just let price continue to develop, and let's say it's a trend day, right? We may have caught the low of the day. And as long as price never comes back to challenge the runner, we can stay in the trade. Okay? And this is all, by the way, this is all very much gone over in depth in the class. So let's talk about identifying setups rather in the NQ utilizing this chart. okay? And as you guys can see, there's a number of situations happening on the chart in front of you right now, right? Here's a spot test from below. I don't know if you can see my cursor or not, but here's a spot test from below. Just look at the spot tests from below, where they fail. Look at what holds as support on the tests from above. And you can just see how this thing kind of just gravitates from one spot to the next, and then it stalls out on a marker, right? And that's what gets us short. And then as we break markers below the spot, we're able to ride that down to the next corresponding spot or even the next one. But it's not uncommon, guys, that a spot is pretty much the low or the high of the day or a marker. It's not uncommon at all. Now, some of you guys might be saying, well, dude, you've got lines all over the chart. Well, it just looks that way because a lot of these bars are like 10 and 20 handle bars. Each one of these spots, if you look, there are 10 handles between each other. 36, 46, 56, 66, right? 18, 26. So there's plenty of handles to be had in between each one of these levels, okay? So it may look like they're sitting on top of each other, but they're not. There are 10 handles in between each other. And again, guys, this is just an afternoon, and you are seeing plenty of opportunities to get what I call a day done, okay? Price action is key. Again, everything that I talk about, everything that I teach is rooted in price action. It is absolutely the core of the strategy. As you just saw on the chart, the NQ trades in a very mechanical fashion. Okay, I tend to talk about the ES, the S&P E-mini to be a little more emotional, and I'll tell you why. The reason that I say that is mainly because it is such a widely traded product. There are people all over the world, all different account sizes, including institutions that trade the ES, right? Our volume, for instance, on the NQ is about a fourth of the volume of a typical ES day. Now, that doesn't mean that we are illiquid or we are thin, but there's plenty of liquidity to do what we need to do. And the cool thing about trading the NQ is that we don't have to be sized up to get what we need out of the market, right? We don't have to be traveling around with 10 contracts and assuming all of this risk to get it done. We can take multiple trades with very small contract size and still be very profitable at the end of the day in and day out. And consistency is key, right? So I'm kind of getting off the slide here, but that's the point. It trades in a very mechanical fashion. That is the reason, guys, that I focus on the 100 handle block. I've recognized repeatable price action within the entire 100 handle block. And by the way, guys, we have, we saw, let's just take Friday, for instance, from the low, they almost bounced that thing 300 handles, right? So we saw price action through each one of the spots, through each rung of 100 handle blocks. It was amazing, honestly. So price is the only constant in the market. I absolutely encourage you and I urge you to learn how to read price. And I teach that, okay? Indicators can provide lagging signals. As you saw on my chart, and that is the chart that I trade, there's no indicators on that chart. I don't use indicators at all. Again, there are very recognizable and reliable patterns of price action in the NQ based on those levels. Spots are where price reacts. So we watch price and we wait for the setup. However, that being said, and I will tell you that the NQ is fast. Okay, so it's up to you as the trader to follow the rules and manage risk in the trade. Okay, I'm going to post setups in the room for you guys, and we're going to walk through it. It's not a shadow trading exercise, not by any means. I'm trying to teach you how to do this, okay? So how do we get started? Number one, I encourage every one of my students, if you will, to establish a trading plan for their intraday trading. You know, again, I get all kinds of emails, guys. I get emails from folks that say, hey, if I could just get 20 handles a day, that's a life changer for me. I teach them how to do that. I actually, speaking of 20 handles, I actually issued a 20 handle challenge in the chat room. I don't know, what was it, 3 weeks ago, 4 weeks ago. And what it did is it made guys and gals accountable for their trades. They would post their entries, they would post when they get risk out, and they would post when they book their runner, all in the spirit of trying to capture those 20 handles a day. And then they would say their day done. And then they would do it day in and day out, and day in and day out. And it's really a cool thing to see. It really is. So we got to, number one, establish a trading plan for our intraday trading, right? We want to decide how much capital you have for this endeavor. And we need to define and minimize your risk, okay? So not all trading plans are the same. I'm here to help you establish that plan. I'm here to tell you, hey, that's not a feasible plan, right? We can all do math. If it's 20 bucks a handle, right, and it's traveling 300 handles a day, we can all do that math. You're not going to capture all those handles, okay? So it's very important that we approach this with a mindset of feasibility and being consistent day in and day out. So again, if you fail to plan, you plan to fail. So it's very important to set that feasible goal. I tell folks to set themselves up for success. Number one, with an account size, and number two, by achieving this modest goal consistently, right? You might look at a 20 handle number and you're doing the math in your head now. Well, Tony, dude, that's only 20 bucks a handle. That's only 400 bucks a day. Day in, day out, day in, day out, 5 days a week, okay? 4 weeks a month. You can see how it will compound on top of itself. You don't want to get in the habit of having a 100 handle day or a 50 handle day and followed by a minus 20 handle day. You're just all over the place. We want to teach you how to be consistent with this. Okay? Number two, or mainly I should say, it helps build confidence in the strategy by doing this day in and day out. And I'm going to reference the simulator right now because a lot of this is foreign to you guys, okay? Especially the folks that have never traded futures. So once you watch my class, the next thing you're going to do is you're going to download my chart, and our preferred broker is thinkorswim, TD Ameritrade thinkorswim. That's where all my charts are built, okay? You're going to download my chart, and then you're going to jump on your simulator to start. And I want you to do that for a minimum of 2 weeks. And you're going to treat it just like a normal account, just like normal cash. And you're going to try to get into the setups in the room and then start to show some consistent results. It's not an exercise to see how much money, fake money you can make. It's merely just to get the mechanics of the strategy down. Again, I'm very unorthodox in the way that I trade. I don't use hard stops. I watch price action. We hold runners. We put even stops on runners, on and on and on. Okay? So it's very important that you respect risk, especially when you're trading the futures. So let's talk about capital. So although there's not your normal $25,000 in capital required to trade, to day trade normal stocks, you can trade I don't know what I put there. You don't need $25,000 to start trading is what I'm trying to say. But it's important that you make sure you're well capitalized for successful trading, right? So it's not feasible to say, hey, dude, I've got, $5,000 or $6,000 and I want to grow that. I want to double that every month, right? That's not feasible, right? So what does it mean by setting ourselves up and capitalizing ourselves correctly? Each contract requires overnight margin of, and I think it's a lot more than that now given the volatility. I want to say it's closer to $6,000 right now, but let's just use this as an example. There are other brokers out there that do futures only, and they provide these intraday margins, which are very, very low. Some are as low as 500. And, you know, hey, if you've got a small account, just because they give you that intraday margin that low doesn't mean you need to start going and trading 10 contracts at a time. You got to keep it real, okay? I think thinkorswim even offers an intraday margin to certain account holders if you meet the requirements. So you'll need to check with that. But number one, we want to establish what a full position is for you. In other words, are we trading 2 contracts? Are we trading 3 contracts, 4, etc.? And what I try to tell folks is, look, if you're trading 2, in our margin, our overnight margin is $4,000. That means that's your very minimum you need in your account, okay, to trade 2 contracts. That's the minimum. And you have to account for losing some money as you start to learn this, right? You're not just going to start printing money right out of the gate, but we're going to help mitigate and collapse that learning curve with the classes and with my presence in the room with you guys, again, walking you through these trades. If you're carrying positions overnight, you must have enough capital to cover that margin. That's why I say you need that full overnight margin per contract on your full position. Okay, so, and I also maintain that this is not a strategy for a single lot trader, a single contract trader. It can be done, and I can teach you how to do that, but you're not going to have a runner on a single contract. You're not going to be able to take risk out of a single contract. You then become what we call a scalper. And again, you know, that may appeal to you. Hey, I only want 10 handles a day, and I can do that with a single contract. But the bottom line is, regardless of the size, if you're carrying it overnight, and you never know, you might have to if you get in trouble, right? If you have to take a position home, you want to make sure margin is covered. That's all. So risk management, you saw the chart. You saw the risk markers above and below each spot. That represents 4 to 6 handles of risk depending on the setup. And that tends to be what I call the sweet spot for risk. In my analysis of price in the NQ, that is what I had to endure sometimes for the trade to actually work out, okay? So that doesn't mean that, you know, I can just, well, if it's only 4 to 6 handles, I can set a stop at 7 handles. It doesn't work like that, okay? I can tell if I am taking excessive heat or excessive risk in a trade. If a trade is going against me, that's what we call heat. I can tell the probability of that trade is probably not going to work out if it exceeds the sweet spot of 4 to 6 handles, okay? So again, by utilizing spots as entries, they're fixed on the chart. We've got our risk markers above and below. Our risk reward ratio is typically 4 to 6 handles to make 10. Now, why would I say that? Well, let's just use the example of buying the 56 spot. Again, I'll just lean on that because we're kind of hanging out there right now. Anyway, so if I'm buying the 56, it's against the 52. So for all intents and purposes, I'm risking 4 handles, and my logical target is to go spot to spot. So I want to go 56 to 66. So again, risking 4 to make 10, okay? Now again, the NASDAQ is thinly traded. It tends to have a wide trading range. That's the appeal, okay? 100 handle day range is not uncommon. Yesterday, the low was 26, and we saw it go 100 handles to the next 26, basically intraday. That was a very, very beautiful trade. So again, I do not employ a hard stop methodology. It's crucial that you manage risk in any given trade. There are specific rules that I will tell you guys and teach you guys in the class, okay, about how to watch price and watch your risk markers and when maybe you should scratch the trade or when your marker's busted and how to actually get out of that trade without taking a complete bath on it, okay? The NASDAQ can move very fast, so it's important that you identify risk in the trade and take action. And that's what I teach you guys. We cannot hesitate. We've got to take action in order to capture these profits or these handles. Okay, so by utilizing the levels that I've established and the rules around each entry, we are, again, I keep leaning on this because this is what is key to your longevity in the game. You cannot be taking huge losses while you're learning and expect to stay in this thing. Okay, so risk, again, is very, very personal. You will need to establish your threshold for such risk. You know, when is too much, too much? And the other side of that is there are some people that will trade scared and they'll take trades off that had they waited another 2 minutes or another bar, it might have worked out in their favor. So it's very important that we understand what we're getting into. But putting it all together, what we know is we need a trading plan, right? And I help you guys with that. I walk you guys through that. We establish the plan together. Number two, for an edge in the market, we must be able to identify risk. And by utilizing spots as entries, we can absolutely do that, okay? Price action is key. We wait for the market to set up. We wait for price to come to us, and we take action when it comes to a spot, whether it's a spot test from above or a spot test from below. We know what we need to do. We utilize risk markers to navigate price. We don't use them as hard stops because we'll be giving away our hard-earned capital, okay? Once a marker breaks against us, we deploy an exit strategy, and I talk about that in the class, and I talk about how to take a loss and how to take small losses throughout the day, or, you know, versus a huge loss that may, you know, keep you out of the game completely. There's another thing that we haven't discussed yet, and I talk about it in the class as well as in the room a lot, and that is mental capital, right? That's almost as important as the capital in your account. I don't want you guys to get off the reservation and start taking these weird entries and then creating these losses for yourself and then just giving up, okay? There's a method to the madness. So typical pitfalls that intraday traders fall into. Number one, not following the rules, right? We have specific guidelines and rules to follow if this appeals to you and you want to start trading the NASDAQ E-mini. Some folks like to use risk markers as entries, okay? That is not the strategy. Strategy is to use risk markers to lean against, whether leaning against as support or leaning against as resistance, okay? Very important, we use spots as entries. Overtrading, the NQ, it has a wide range. It is very easy rather, to overtrade. And what do I mean by that? That's, you know, it might be called another term, broker appreciation. That means we just rack up all of these commissions because we're just keeping, you know, we keep pushing the button and we keep trading and trading and trading well past our day done, or maybe we're revenge trading and we're chasing losses and we're just hell-bent on trying to get that money back, if you will, right? And that's what typically will create a situation of overtrading. So we don't want to do that. We want to try to, again, establish our trading plan and execute on that plan in as little trades as possible. Ideally, we're going to trade 5-6 trades a day and be done. And then you can jump on your simulator to learn how to trade this thing further, to hone your craft. If you are unwilling to take a loss in a trade, you are not going to have a good time with this. You've got to be willing to take the small losses, okay? And that's something that's ingrained in a lot of people that have been trading for a while. They get really stubborn and they don't want to take a loss, right? We have to be willing to take a loss and then just let the market set up. So here's an example of using a risk marker as an entry, okay? So, you know, maybe we're using this as an entry, right? And as you can see on your screen here, it just continues to go through the risk marker, and the spot gets a reaction that's not favorable for you because it goes and challenges the risk marker above the spot, right? So if we had stayed true to the entry on the spot, and you can see that it went through and it broke the marker, but what you can also see, guys, is that corresponding bar that comes back inside the risk zone, that's our escape hatch, right? So when we have a broken marker like that, the market typically will come back, because even in the most bullish of instances, it will do a little back and fill, right? I mean, this example on the chart is pretty key. If we shorted this, our marker broke, it gave us an out for, you know, a -3 or a -4, and then we simply let price set up and we bought the spot test from above with the logical target of the spot that's open above. And again, I get into this in depth in the class. Overtrading, okay? This is when we get into this really truncated range, and maybe we start doing weird stuff like selling the market here and then buying it back here, and then, you know, just taking stupid entries and overtrading a very tight range. We want to avoid doing that. We want to just let price set up, okay? Knowing when to take a loss. Using that same example previous, well, actually, it's not the same example, but using this example, it goes through the spot, right? It breaks the marker, and you see how price relaxes back into that risk zone. That becomes our escape hatch. And I will tell you in the room, hey, if you're short X level, your marker's broken. This is your escape hatch. That's what I mean by it's up to you to take a loss. Okay, you've got to be willing to do that. So let me share a few more success stories with you guys. This is Mark, who's in our room. I've been trading with you for a week and a half and was in my webinar on Saturday. He's made a profit every day except the first day because he didn't know my trading plan. That's 6 winning days in a row. I've been trying to learn to trade futures for a year and a half, and I never had any success. I've used many indicators. I've hopped from room to room. Not uncommon. You know, a lot of us have done that. And this is the first time that he thinks he actually gets it. He doubts he could do it on his own, yet he's going to stick with it. He is seeing price action and prefers watching price over watching indicators, okay? So a testament to price action. So we got to know the rules. We want to, number one, we want to use spots as entries. We want to utilize risk markers to lean against. They're not hard stops. We want to stay in the trade if the marker remains good. Okay, that's what keeps us in trades. If the risk marker breaks, we have to get defensive and deploy an exit strategy. It's very, very important. And I walk you guys through this in the room. Okay, you must be willing to take a loss if you're going to remain in this game for any amount of time. And the final rule, price over everything. All we are doing, guys, is trading price action, period. The levels that we lay over price is what gives us an edge. We've got fixed entries. We've got fixed risk. Very important. So let's take a look at how I operate in the room. Okay, so I might say, as you can see here on the screen, sold the 88. So we sold it on a test from below. Okay, remember we expect that to be resistance, and I'm bidding 84. So I sold the 88. I sold a full position there, and I'm bidding for all but a runner at 84. So what that means is I just went +4, okay, +4 on my risk out. So now I put an even stop at 88, and you can see how you're able to capture the full 10 handles if you want. It obviously kept going. You can see other members in here that are following the trades. The previous trade, we wrote it up into that area. When to take a loss. Here you can see where I sold the 80, which I might have sold it in here, and the marker broke. So as price relaxed back into the risk zone, it took a -2. Okay? Very important that we're willing to do that. And all we have to do is simply let it set up from there. And we got to be ready to take the next trade. Okay, this is from Susan, who's been with us for a while. Tony, OMG, I don't know why, but I watched your presentation in Phoenix. We had a live retreat in Phoenix. Never knew anything about futures, and it immediately clicked for me. I could not wait to get home and try it in paper. That Monday, we got home. That's exactly what I did. By the following Monday, I was trading in my live account. I love it. I've had up days and down days. Losses have been much smaller than gains. It's only been a few weeks, but it's been amazing. I trade small because I know I'm still learning and I have a plan. Love it. My account is heading back up for the first time in many, many months. And that's what it's all about. That's what it's all about for me. When that light comes on, when you have that aha moment, that's more important than any P&L for me. Okay? So let's wrap this up. We're getting close to wrapping this up. So what we know so far, we know that the NQ is a fast market and you can catch some very nice trades provided that you're following the rules and you stay on the reservation. Okay? However, if you don't get it right, these trades can go against you in a big, big way, right? So we want to make sure we're willing to take losses. This is why you must have a plan and execute accordingly. If you adhere to the rules of the strategy, you should be able to flatten the learning curve without taking excessive losses. This is not a swing trading or a long-term holding strategy. We are taking multiple trades throughout most days, both long and short. This is a strategy that is specifically for an intraday trader who's looking for an edge, okay? And that probably appeals to a lot of you guys. I don't want you to start trading this thing tomorrow without the key levels or a deep understanding of the exact strategy. Your next step is to sign up for the class that will be playing on Saturday. Okay, this Saturday. It's a 3-hour class. Take the time. You will have plenty of time to review it. The class will be an on-demand recording of at least 3 hours. It might be a little bit over 3 hours. The material covers A to Z on the strategy, so I go in depth on everything about the strategy, okay? It also comes with a PDF that you can download as well. Oh, actually, I take that back. We're not playing the class on Saturday. By buying the class now, you have immediate access to the class and unlimited access to the class for that matter, and any updates that may be forthcoming within the class, okay? It is a recording. Again, there's a guide to follow along that's printable. You can use it for future reference. You can use it to create cheat sheets for yourself. And again, you will have lifetime access to the class so you can watch it as many times as you want or need to. I have several members that will revisit that class over and over again. Most importantly, you will have access to me via email anytime as you start to dive into this and start to execute trades. If you have questions that come up, if you want to do a trade review, again, if you want to talk about your trading plan, any other issues related to NQ futures that I'm teaching. So the intraday NQ class is available now. You will have immediate and unlimited access to it. It has, again, all of the slides with it. It has entry illustrations, exit illustrations, loss illustrations. It also includes my chart. My chart, again, is a thinkorswim chart. Now, if you are not on thinkorswim, if you are from another country and you use, TradeStation or Interactive Broker, that's something that I can walk you through in how to build your own chart. Okay. Remember, all we're trading is the 100 handle block. So I can teach you guys how to do that. All of my levels are repeatable every 100 handles. So you don't have to be on thinkorswim. It is our preferred broker. But if you are out of the country and cannot use it, I will walk you through that. Okay. The other bonus that you guys will be getting is with Futures 101 with Don Kaufman, and then a full 1 month access to TheoTrade. So now you're able to come into the room with us. We make a plan in the morning, pre-open. We get ready to trade, and then we execute trades. Now, some people might wait a little bit before they start trading. Again, it sets up throughout the day. So I am in the room all day long. And then I do a 1-hour session every single day that's also recorded. So I would venture to say by spending 1 month with us, you're going to want to be in the room every single day thereafter, right? It's invaluable in my opinion. Because once you're a total Theo member, you're able to review the archives, you're able to do a number of things, and then you have access to all of our classes, right? This is just my class, this particular situation. So if you're going to spend a month with us in the chat room, you're going to see and be introduced to all of the other instructors and all of the disciplines that they cover. We don't overlap a lot by any means. I'm the only one doing the NQ, and we have, again, other very, very fantastic instructors. I think we got a few more minutes to open up any kind of questions that you guys might have. I see that questions are being answered.